There are no ifs, ands, or buts about it. The Rhinoceros Rex absolutely sucks. It has ruined lives, torn apart families, and caused financial duress. It has caused people to lose their job. The unemployment rate skyrocketed. People in nursing homes and the elderly are scared for their lives, literally. It has been awful, and it has caused the stock market to react accordingly. However, as stock market investors and traders, we have to be forward thinking. We have to be one step ahead of the market. This isn't going to last forever. We are going to come out of this Rhinoceros Rex chaos. The pandemic is eventually going to subside. We're going to find either a vaccine or therapeutics that can help us get back to a normal life. And I personally believe that we're going to come out of this stronger as a community, as a society, and stronger from a financial perspective. So we need to position ourselves in order to take advantage of the recovery. There are still some stocks out there, some really good companies that have been beaten down because of this, and we need to look at these companies, find them, and get involved with them before the actual recovery happens. That is how we can profit from these beaten down stocks that are in reality really good companies. In today's video, we're going to be talking about my top 5 long-term stocks, long-term investments that each have over 100% upside potential. They're going to the moon. Some of these 5 stocks are value plays that I believe have been beaten down too much, somewhat of an overreaction, and some of these 5 stocks are growth companies that are poised to exhibit massive growth in the coming years. Let's break down these 5 stocks from a business model, fundamental/financial, and technical analysis, breaking down the chart perspective, and I'll give you my reasoning why I believe each of these 5 stocks has the potential to have 100% upside in the coming months and years. If you're new to the channel, this is Touchdown Trades. My name is Kevin, your trading BFF, your stock market bestie. Go ahead and destroy that like button for me, as these videos do take a long time to make, a lot of time, effort, and research. And if you're not yet a subscriber, what are you waiting on? Go ahead and destroy that subscribe button as well and hit that notification bell so you get alerted every time I post a video. Let's jump into these 5 stocks, these 5 long-term investments that are going to the moon. And as always, let's secure that bag by making smart investments and sound trades. Let's get it. All right, trader and investor homies, let's talk about my top 5 long-term investments that I believe have 100% potential. Before we get started, go ahead and destroy that like button for me, as it tells YouTube that these videos do carry value, they do offer value, and it helps the channel grow. Also, check out the link in the description. You can get 2 free stocks when you sign up with my link for Webull. When you make an initial deposit of $100 or more, Webull is a great brokerage. The brokerage that I'm now using, it offers great charting, 0 commissions. All right, let's jump right into this. Stock number 1 is going to be CCL, Carnival Cruise Lines. We've talked about this in the past. This is a ticker that got absolutely decimated, and a sector that got decimated by the Rhinoceros Rex, and that's no surprise. The hospitality industry, the travel industry got absolutely crushed. But this is a company that will survive the Rhinoceros Rex. There's no doubt about it. So you're walking down the street with your dog, and you see your dog eat a diamond, right? And that diamond's worth $20,000, let's say. Are you going to dig through that pile of poop a couple days later when your dog dumps out that diamond to get that $20,000 diamond? I sure am, and that's how I'm looking at this Carnival Cruise stock. Sure, it's in a bad spot right now, the whole industry is, but we're going to make it out of it. And this is a company 3-4 years from now that will be doing the exact same revenue, be doing the exact same sales, and have the exact same profit margin as it did 3 years ago when it was trading up at $50 or $60 a share. So it's in my opinion that we're getting this for a steal. Let's dive in, look at the numbers, and I'll show you why this company will survive. And we'll look at the sector and see when the no sale orders get lifted, all that good stuff. So the no sale order has been extended. through October 31st. But I expect when that is lifted, Carnival Cruise and the other cruise liners will be offering massive deals to get the customer base back onto their ships, have those ships at capacity, and they're going to start sailing right away. And I don't believe the cruise line industry is going to be hurt as bad as something like the airline industry, because people still want to go on vacation, people still want to travel on leisure travel, not so much business travel. I think the airlines industry is going to be hurt for decades to come because companies have learned to telecommute, learn to use sources like Zoom and Skype to do their business meetings, and it's actually saving these businesses money by not having to send their employees across the country and travel across the country. But grandma and grandpa still want to go on their annual cruise, so I think the cruise line is going to recover and be just as strong as it was before the Rhonosaurus Rex came in and decimated these stocks. Also, if we take a look at the fundamentals, the financials for Carnival Cruise Lines, we have sales of $10 billion last year. We have a market cap of $12 billion, which gives us an awesome price to sales ratio of only 1.22. And the cash per share, we have almost $10 of cash per share. So they have cash on deck, no pun intended, that is going to allow them to survive this shutdown. Sure, there's no revenue coming in right now, but they had tons of cash on deck, which is going to allow them to continue to survive while they're shut down. And that no sale order I expect to get lifted here very, very soon. We want to get these cruise liners up and running, and I believe it should be a choice, the customer's choice, whether they want to travel or not. If you don't want to travel, you want to stay home, you're a little bit worried about the Rhonosaurus Rex, that should be your choice. If you want to go on a cruise and risk it, that should also be your choice. And I think most people are going to be wanting to travel and still go on vacation and take cruises. All right, let's look at the daily chart here, and I'll talk about what I think my personal investing plan with this Carnival cruise will be, the important levels, and where I think it's headed. So after the Rhonosaurus Rex decimated this stock, we found a base down here below $10, and we've currently been chopping around. And the reason I like Carnival Cruise more than the other cruise liners is because it hasn't really recovered as quickly as, say, your Norwegians or your Royal Caribbeans, but Carnival Cruise is still a very good company, and they have a lot of cash. So I don't see it breaking these lows, and if it doesn't, I really don't care, because I know for a fact this company is going to survive. It's not going to go into bankruptcy. It's not going to go out of business. It's just too big for that to happen. So this thing could go to $2, $3 a share. I'm not saying it will. I don't think it will. I think it's hit a bottom. But even if it did continue to drop, I know 5 years from now, it's trading back up here above $40, near $50 a share. So I'm putting a 2-year price target of $40 per share on Carnival Cruise Lines. Ticker number 2 is going to be PLAY, Play Dave & Buster's. Okay, this is a company that has also been crushed by the Rona. We can see that it was trading up above $45 a share pre-Rona and has sold off and is currently trading at about $15 per share. Now, this is a restaurant and a gaming arcade kind of thing that me and my girlfriend used to go to all the time before the Rona came in. And they were opening up new stores, and I really liked the business model. They had the bar adult section with huge, like, theater projection TVs where you could watch sporting events, and they had really nice bars. And me and my girlfriend would go. I'd watch the game. I'd entertain her, because you got to entertain the women, or else they start yapping. So we'd play the arcade games, entertain her, and I'd be peeking over watching the NBA or college football games. And I really like the business model, and I believe this is a company that has also been, it's kind of an overreaction in that it will eventually one day get back to where it was pre-Rhonosaurus. If we take a look at the numbers again, we're getting this at an extremely cheap valuation, obviously because it's been absolutely crushed. The price to sales ratio is less than 1, which tells us that the company's had revenue coming in, a lot of revenue coming in compared to its market cap. We had a sales of almost $1 billion with a market cap of only $730 million. So the price to sales ratio is at very low. We have decent cash per share on hand, about $5 of cash per share outstanding, which is going to allow this company to survive the shutdown. They're already opening back up They got people walking around spraying the arcade games with sanitizer, trying to keep everything sterile, everything clean, stopping the spread. And me and my girlfriend actually went back a couple weeks ago to our local Dave & Buster's, and it was up and running, and it was actually pretty packed. Now, of course, there's still some states that are shut down. Of course, there's still some locations that are closed. But 3 years from now, this is just going to be a blip on the radar. It was going to be a bump in the road, and this company will be back where it was. So I'm putting a 2-year price target of $35 per share. I'm going to try to put 2-year price targets on all the tickers we talk about today, because some of these have been so crushed, it's going to take a while for them to get back to their norm, right? To where they came from. And this thing was trading up near $50 before it happened. It's trading at $15 right now. So that's more than a 300% upside potential if it can recover everything it lost. And I think that it can. It's going to take some time, but I think that it can recover and get back to where it was. The third stock that we're going to be talking about is one that we've talked about quite a lot in the recent videos that I've been doing, but that's because I'm so high on it. This is one of my favorite stocks right now, and that's ticker MGM, MGM Resorts. And the reasoning being is because of the legalization of sports betting in the United States. MGM is known for its big resorts around the world, its big casinos. Las Vegas, you drive down the strip, you see the big MGM Grand, all the signs. But that is not why I'm wanting to invest in MGM. The reason why I want to invest in MGM is BetMGM, their sports betting application. Now, 5 years from now, I think the majority of the states in the United States will have legal sports betting. 10 years from now, I believe every state in the United States will have legal sports betting, and MGM is positioned to capture a large market share of that legal sports betting in the country. If we take a look at some of the other stocks in this sector, like Penn National Gaming, another sports betting company, look at the move that it made post-Rhonosaurus to the moon, right? It's up, from its Rhonosaurus lows, it's up almost over 1,000%. How about DraftKings, DKNG? Absolutely to the moon. And MGM hasn't done that. And why is that? Because people don't think of MGM as being a beneficiary of the online legal sports betting in the United States. But it is going to be. So it's flying under the radar, and as soon as it starts generating more revenue from that online sports betting, the numbers, and it's going to beat earnings like crazy. It's going to beat the earnings expectations like crazy because it's flying under the radar. So we're getting an absolute steal. Not only do they have the brick and mortar casinos, the properties around the world that are awesome assets that they own, they're going to be a player in the online sports gambling industry, and it's flying under the radar compared to the peers in its sector like Penn National Gaming and DraftKings. So this MGM is an absolute steal right now. I know it's reclaimed a good portion of the sell-off, the Rhonosaurus Rex sell-off, and we're trading right now at 20. The pre-Rhonosaurus, where we are up here around 35 or so. But I think this is a company that was undervalued pre-Rhonosaurus Rex. So I'm putting a 2-year price target of $40 per share on MGM, which is almost a 200% move from where we're trading at right now. I think it has tons of potential. It's going to the moon. The fourth ticker is another one that we've been talking about a lot on this channel. It's because I have a lot of belief in this company as well. And that is AMC Entertainment, the movie theater company. And we traded it back here in the private Discord channel. We caught a really nice trade on this AMC, about $4. We wrote it up over $5 per share. And I'm now looking at this as a longer term investment, as we have now sold off and cracked $4 again. I think this is a undervalued company. And you're probably thinking to yourself, Kevin, the theater industry is a dying industry. It's going out of control. Nobody's going to the movie theaters anymore. This is going to be a bankrupt company in 5 years. And let me tell you why you're wrong. Okay, AMC has struck a deal with Universal Pictures. About early September, they struck a deal with Universal. And if you didn't know, the movie theaters have first rights to new release movies filmed in Hollywood. A new movie comes out, the movie theaters have a hold on those new releases. I think it's a 1 or 2 month hold before it can be sent to Redbox or Netflix or wherever the movie wants to get sent for rentals. Okay, so AMC has struck a deal with Universal so they can now stream these new releases stream them online. This is going to be huge. So you can maybe pay 10, 15 bucks and watch a new release movie from your house. And this is the future for the movie industry. Sure, they'll maybe keep some of the brick and mortar movie theaters open, but we're heading in the direction of streaming. You want to pay 10 bucks, you gather your whole family around and watch a new release movie. I think that is the future of AMC and the entire movie industry. And AMC was the first to market with this plan. They were the first to act, and that is going to give them the foothold in this streaming, the new release kind of movie theater trend, the movie theater wave, and I think we're going to see AMC with a really nice recovery. Right now, AMC has $4.46 of cash per share on hand. That is more than the stock price. So they have more cash on hand than the company is currently worth today via stock price. Why is that? Because they were bleeding money. They were losing so much money when all the movie theaters were shut down. But that forced them into a corner and forced them to strike the deal with Universal to stream the new releases, which I actually believe is going to save the company. So in turn, the Rhonosaurus Rex may actually help AMC in the long run. My 2-year price target for this AMC is going to be $10 per share. I think it makes a really nice recovery, and that's more than 200% from where we're trading at right now at current levels. It's been beaten down over the last 5 years or so, not only because of the Rhonosaurus Rex, just because of cord cutting and people not going to the movie theaters, watching Netflix at home. But this on-demand deal they did with Universal is going to save this company. The fifth and final ticker is going to be one that I talk about all the time on the channel, is HYLN, ticker HYLN. It's been dropping like a rock, but I love it. Why do I love it? Because I get to add lower. I think this is caused by a little bit of two factors. One, dilution. Tortoise Acquisition maybe selling their shares. Some big holders that bought in pre-merger selling. Also, I think it's because retail traders were buying pre-merger right here, looking for the next leg up. When it didn't happen, they panicked out, which is causing a lot of selling and a drop. But I know this is a company that is going to be successful. All right, guys, check out my little diagram down here. I'm going to tell you why I think HYLN is going to be very successful and is going to recover from this recent sell-off and go to the moon. Okay, so I have a friend in the trucking industry. I've talked to a lot of people in the trucking industry about the truckers moving to EV, the trucking fleets moving to EV. And they told me that these truckers are very, very skeptical and they're not wanting to do it because they don't think there's going to be the range or the reliability. They don't want to have to stop and charge their truck for 30, 45 minutes. HYLN is going to be able to use their powertrain hybrid solution to bridge the gap and eventually get these trucking fleets to EV. Okay, so right now we're running on diesel. These Class 8 trucks are all running diesel. HYLN is going to be able to use that natural gas fallback to the fossil fuel in order to get these trucks to say, okay, this actually works, we can use EV. And in the process, they're going to develop a customer base of these big giant trucking fleets who will in turn buy those total EV trucks from HYLN 5 years down the road. So HYLN is going to be able to sell these hybrid powertrain solutions right now because they do have that fossil fuel fallback. Okay, these big companies like Tesla, Nikola, trying to sell the straight up EV Class 8 trucks are going to have issues doing so because these truckers are very skeptical on total EV. My 2-year price target on this HYLN is $100 per share. It keeps dropping and I keep buying and I'll do so. We do have the 200 EMA coming in and I expect that to act as support. So we'll see what happens, but I have a lot of faith in HYLN. It continues to sell off, but I think this is just market makers manipulating the stock, getting the retail traders that bought in pre-merger to panic sell out of their position. All right, guys, I hope you guys enjoyed the video. If you did, go ahead and hit that like button for me. Helps me out a lot, helps the channel grow. Leave your favorite 100% stock in the comment section down below. Long-term stock. Can't be a penny stock that you think is going to jump up 100% in a week. We're talking about investing, not swing trading in this video. So leave your favorite 100% stock down in the comment section down below. I'd love to see those. I'd love to see the recommendations of my viewers and check those out. And sometimes I see one that I like and I do research and I actually end up investing in it because of you guys' recommendation. All right, if you're not yet a subscriber, consider subscribing and hitting that notification bell so you get alerted every time I post a video. Until next time, peace.